live stream. Thank you guys for joining us. All right, team. What's up, everybody? Let's make sure we have sound, that everything is working correctly. Maybe just behind just a few seconds. I hope you guys had a great day today. I have some really cool stuff I want to show you. All right. Yes, the camera is not on. All right. If you could, please do me a favor. Do us all a favor. We're trying to grow this community. We put in a lot of work. I have some really cool stuff I want to show you tonight. If you could, if you're new, please like, share, and more importantly, subscribe. We are trying to get to 100 subscribers. Okay. We have a lot of education that we go through. I have some charts you're really going to see. You're really going to want to see this chart because, it actually opened my eyes. And I'm like, oh, wow, this is the professional stuff that you don't get everywhere. Okay. And it's the stuff that you need to see if you want to take this trading, and, whether it's long-term, short-term, day trading, swing trading, just managing capital for yourself. It's important that you see things like this because it helps you justify the reasoning on why it is you're going to do what you do, or having somewhat of a macro thesis and not letting your opinions get in the way, not letting CNBC or Bloomberg or Yahoo, StockTwits. What is the chart telling you? Okay. What are the cold hard facts telling you as far as the data? All right, we're having a slow crunch, it seems as though. We just got GDP numbers. That's what I'm going to get into, along with some charts, some earnings. So again, welcome if you're new and you have any questions. If you have any tickers, throw them in the chat. We'll cover them. If you're struggling, guys, please, what is it that you're struggling with, or what kind of questions, what is it that I can possibly help you with? What can members in chat help you with? All right. It's important to know what the market could do for you, whether you're broke, poor, whether you have a little bit of money, a lot of money, black, white, brown, purple, red, girl, boy, in between. Okay, old, young, middle, it does not matter. If you get the education and you come to our live streams, if you're liking and subscribing, okay, you're going to get better at trading. You're going to start noticing when to enter, when to exit, how to identify levels, how to identify the sentiment, and whether that sentiment has changed, whether it's through data, whether it's through a stock's, physical news, or a new release, or an approval, the things that you need to know more than just the trading of the chart and candles and patterns and, all that fun stuff, between the time and sales, the level 2. All right. Trading is not perfect, and it doesn't have to be perfect. It is not hard to make money in the markets, guys. I will attest that. Again, if you could like and subscribe, it is greatly appreciated. We do trade here. All right. Monday through Friday, 7:30 to 4, sometimes 7 o'clock in the morning, 6:30, but 7:30 to 4 earnings, we'll cover them. We'll go on till 4:35, 5:30, however long it takes. All right, we have a good time here in chat. We're all here for one reason, not to lose money, and then second, make money. Okay, so we manage our risk first, we capture up or downside second, and we let the in-between be the in-between. What do I mean by that? We don't let ourselves get in the way of winning positions. We get our moves, we have our targets, we hit them, bang, 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 we take them off, and whatever you do after that is completely up to you. So again, this is not financial advice. This may not, some of the trades I talk about that I take on this stream or a recording, it may not fit your risk tolerance, okay? Especially if you're new. All right? Give it time. Do not give up, guys. I'm telling you, change your life. You want a vacation? If you want a new vehicle, you want to help, have some extra cash for that. All right? Maybe you're not impatient and you saved, you put capital to work, long term, whatever it is, and you were able to come out with that vehicle with also still having a savings account of sorts because you were able to, put some money to work into companies that are cash flowing and being a part of what's going on and the opportunity that is to be had around the world, guys. I'm going to show you a really awesome data point that I have talked about for a day or two. Everybody's talking about, oh my God, GDP. Guys, this is the place. Please like, share, and subscribe. We're just trying to grow a community of traders. Free 99. I repeat, free 99. All right. Wait until you see what I have in store. So what happened today? We're going to get into it. All right. We didn't have much data. We actually didn't have much news at all. All right. You had a little bit of Ford news, some things like that. There was talk of Disney over the weekend. It felt like more it was like an inside job, if you know what I mean. It was like, what was the reason to talk about Disney? I didn't see a reason. I mean, it was on Barron's. It was on CNBC. So Disney was a stock to play today. I completely forgot about it, and I just could not get in at those prices, and that's okay. We have an enormous week coming up. An enormous week. All right? So what I have here is tomorrow we're going to cover Uber. All right? We can cover CAT, whatever you guys want to cover. And again, if you have any questions, if you're struggling, if it's a ticker, a stock, you want my opinion, we bring out a lot of information here, guys. Very useful information, especially for beginners. All right, you do not have to pay thousands of dollars and get sucked in by saying they have this, that, and the third, and then you go to pay taxes, and then you don't have a reason to buy those things anymore because, or whatever the case may be. It just, that's fine. You want to go pay and trade for a group, that's fine. You want to pay for courses, that's fine. Just wait until you see what we have to offer here. All right. These videos, I am getting them together. So, we got a huge week. I was very patient today. I was watching SoFi, watched it for a little while, and I said last night on the live stream, what did I say? Guys, it's looking pretty bullish. So what I've noticed, okay, and this is not all the time, and this is not 100%. This is a probability game. What did we say last night? Let's go to SoFi. All right. If you were on the live stream last night, you already know. We were actually kind of bullish SoFi. All right. We have seen this with many stocks. All right. Many of them have been setting up like this. They've been setting up bullish or they've been setting up bearish. Do you see this small gray line that I have right here that I will edit and make it like a color for us? I'll just make it green so we can see it. Okay, you guys saw I did not add that. I put that there last night. I put it there last night. All right, and I'm going to get into another one that if I had to go by the chart to make a decision, in which I'm not going to YOLO, that will be AMD. All right, it could go either way, but I'm telling you right now, it's holding a key support zone. But it doesn't look like this. And I'm going to give you guys the comparison. Well, look what happened last night. I said, guys, be aware. It's holding this top side of this range from $8 to $10. It's holding the top end of that $2 range at $9. Chances are it could be a bullish move for SoFi. And it did. It broke up above it today. Right? It broke up above it today. So what are we going to do? We can look for the pullbacks on this. All right, we can go to a daily. We do not have any moving averages because this thing has just ran. You see that? See how it's just sitting at this previous pivot high right here? And it was sitting there. It was like, it's so funny because, it's not funny, but, the street works at this to where, they have, let's just say like a random hedge fund, right? A hedge fund or an institution, a financial advisor and stuff, they're going to have employed specific people for specific types of markets as far as vehicles, construction, your commodities, all right, your technology, your biotech. They're going to hire healthcare people for biotech, or, people that have an education in that field. So if something is coming out or if something is being done that's making headway, they have someone in-house that can read the data and really tell them what they should do and not do, or whether it is something they should be focused on, whether it's to be long or to be short. Same thing with like semiconductors or technology. There's a new technology that comes out. They have individual people who are very smart in that field, and they say, what do we do? Is this big? And that's how they do this. You have the grocery store, your brick and mortar. Like, there's just all kinds of things that you could relate it to, right? Automobiles, the auto industry, et cetera, et cetera. So what they do is they, throughout the year, they do have there are board meetings. They can talk to CEOs. They can see data like, hey, what's been going on? Hey, things are speeding up, this and that. Like, they talk. It's not insider information. It is them managing these retirement accounts and putting on their best positions for them to make money for their investors. Okay? They are given money. They have to deploy that capital, right? And they have to make the best decision with it. And they actually put in the work. Okay? Whether that's some board members from a company coming to New York, or the vice versa, New York or wherever, Chicago, San Francisco, going to, different places. I'm not talking inside information here. I'm talking business. How is the business doing? They pay visits. They see what's going on. What's coming up? What's new? How's that going? They put in that type of work, guys. So these charts have been telling us something. So let me show you something real quick, and I'm going to be as quick as I can with this, because I know some people can't hang on for just a minute. If you could, again, please like, share, and subscribe. I do not even mean to say please, but what I'm going to show you guys, you're not going to find anywhere else, and I'm going to help break it down for you, because we're seeing it now with the GDP data. All right. So SoFi breaks out, right? Again, what do we have here? You have it holding this previous pivot top. It's holding the top middle end of the range, putting in a double bottom. It's securing this zone right here. And look at the buying that came in. All right, let's do something real quick. Spotify. Now we start with the bigger picture. All right, so let's go to a weekly chart and look in. What do we have? All right, we did have a rejection up there at that 200-day moving average. And I have, this is all live and recorded before they went to their earnings, guys. Look at that rejection off of the 200-day. Let's go to a daily chart. What else do we have? Okay, we don't really have much other than this previous support, or previous support or resistance. I'm sorry. Sometimes I get my words mixed up. So what we really have for this is a gap fill here. Okay, there was a previous gap fill. It didn't even make it up there. All right, didn't even make it up there. So you just got to this area right here where there was previously resistance, and you turned it into resistance again. And what did they do? They sold this thing off early, guys. They were ahead of the move. You're seeing this over and over. Okay, it was trading here. It was like it hit the 200-day weekly moving average, and they got in front of the move. Guys, look at the volume increasing. Can you guys see that? All right. I want to show you this, because this is happening in earnings, and this is what you guys need to start looking for. If this kind of stuff that I'm about to show you doesn't, help get me a subscribe or like, I don't know what will. I'm just here to help you guys. Free 99. I'm trying to build a community of traders. We trade live Monday through Friday, 7:30 to 4. Again, we come on early. We go through charts. We go through news, upgrades, downgrades, news, earnings. What's going on, what's moving. We want to be a part of it, whether it's up or down. First thing we do is manage risk. Second, we make our money, baby. All right, that's all we're here to do. So that was Spotify, right? Let's go to this is where I'm going to tie in something that has earnings tomorrow with AMD. All right, AMD has earnings tomorrow. Let's look at Microsoft, guys. You're not going to see this anywhere else. Now, am I going to make a bet on this? Nope. I'm just going to wait, because it's not 100%. All right, but look at Microsoft's weekly chart. Okay, not too much to see there. Just putting in its range, just meeting in the middle. There's a bunch of tails, 9 EMA. Yes, it's probably by the previous high, whatever. I'm not worried about that. Let's look at the daily chart, okay? What did Microsoft do? Now, if I had to say anything to you, right, and I put this chart, right, and I put that chart right, well, let me grab the hand. If I put this chart right, and then you had a breakdown, so that was earnings right there. If I had to put this chart up for you, if you can see it, I want to make sure you can see it. If I had to put this up to you, what would you say about this chart? Would you say that that's a bullish pattern, or is that a bearish pattern? All right, and why? And why? Why would you think it's bullish, and why would you think it's bearish? These are important. These are important. All right, so you can see it. So I'm going to explain to you what we have here, guys. You have your 50-day moving average. This is a daily chart. Okay, this is a daily chart. Now you're getting, you get into that 50-day zone, it's being bought up. So look at this previous pivot high. You had a previous pivot high and a complete rejection with a gap down. Brought it right back. On what? On volume, guys. Okay, you see that? Look at that. Right there. Right? On volume. Look at this volume. Even previously. Okay, that I'm not too much concerned about. So, we know with an increase in volume, we have sellers up here at the 350 to 352 area. Right? 350, 150, call it. So, you pull it back, completely reverse, and then you gap it down. And it just, it has some further downside from 350 to 328. That's a beautiful trade, guys, believe it or not. That's some good money. So you test a 50-day, you get bought up in front of it, you gap up. So here we go. We're coming into earnings. You get all this news, like just the market's going crazy, bang. Right? What happens? Look at that tail. Look at that tail. And that is also what's not accounted for in this candle is the amount of selling that's up there also. So it closes green, but it's not showing you right here, that tail. There's still a decent amount of volume that's probably a little less than halfway of sell volume. Okay. So this candle is kind of missed, like, oh yeah, look at the breakout on a green candle. Yeah, it closed green, but look at the size of the candle. Okay. And think about how much volume came in to reverse that thing. All right, maybe the sellers just stepped away, let them run it up, and then bang, came in at like the last hour and a half of the day. So a lot of people don't think about that. They'll see a long green candle or a long candle with big volume, and they don't really take in like the size of the tail, which is telling you, if you were to go back to the actual day that happened, you would see that the sellers may have just stepped away because the market was bullish. And then once the market, the S&Ps or the NASDAQ and all the other major stocks were at their resistance levels, bang, they step in and they start selling, right? So we know we have sellers at 350. Let's get to the point. You bring it right back. 1, 2, 3, 4 straight days down. We're holding this here. But what are we also doing? We're making that previous pivot, this 346 area. Now, I have to do this because I'm trying to hide it. I'm trying to hide the earnings. You're making it resistance. It got bought up, but it could not close back above it. You've had selling here, but you just more importantly, this setup here, right? You have a flat top resistance. You break above it, it pulls back. The market goes, Microsoft goes. It gets to a point where sellers step back in and they bring it down for 1, 2, 3, 4 days straight, and you close at the bottom of the range, right? That's a bearish pattern to me. Look at the increase in volume. Right? Look at that volume. Okay? And then what happens? You got your bounce, the day of the earnings. Earnings come out, bang, gap down. You gap down below this based area. There's 3 stages. 1 here, 2, and then this top end would be your third channel. Okay, look at the volume, guys. Look at that selling. You gap down, you're keeping it down. Now, I'm going to presume that we may start to see some weakness. All right, I think we may start to see some weakness. Maybe we're going to put Microsoft on our charts. So what does this look like? I just showed you Spotify. I just showed you SoFi. And I just showed you Microsoft. I showed you 2 bullish setups, or 2 bearish setups and a bullish setup that actually worked out, guys. They worked out. Now, I'm not making a bet on these. I'm just saying, look at what's going on for future reference. Maybe if you're long something and you're putting in bearish patterns and they're selling this thing off going into earnings, chances are it may not be that good, because a lot of these mid-cap to larger cap tech companies are trading at valuations that they weren't trading at the last quarter. They just ran for about 2-3 weeks, not 2-3 months, maybe a month and a half. Okay, so they may not be able to meet these expectations for this quarter. That is the sector you could see a recession, an earnings recession in. Not necessarily like a deep recession, earnings, it's so bad. No, I'm just saying it may not be as up to the standards that they're trading at. Okay, they may not be able to report the type of multiple of a $350 stock that they're at. If they're at $350 and they're trading at 35, let's just call it 45 times earnings, and they're nowhere near that, you're going to have a pullback in that price action. Because in growth, you're either growing or you're not. And if you're not growing, you're coming down. All right, so let's look at Microsoft here, right? I'm going to show you guys something. What's also Microsoft doing? It's also holding this 50-day. But look at this setup. I want you to remember this. You had a previous pivot high. You bounce around flat top. Bang. Bring it up. It pulls back into this base, right? It gaps up above it. Now, what am I talking about? I just want to show you for anybody that's new. So bear with me. Right here. This candle right there. Right? That candle right there. Now, it's, of course, got to mess up on me just because that's how things are. Okay, so if I take you guys to that candle, I'm going to show you how it could not close during market hours above this. See, look, support, 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 technically support. You see the little tail being brought. Now it broke it. Now it's broken it right here. This candle broke it. You get some buyers to come back in. What are you going to do? You're supposed to turn this 345.88 into resistance, and you did. You got above it, and you could not close above it, is what I'm saying. You see how it's resistance still? You got up above it, they pulled it right back. Right? Now, yes, buyers stepped in here, but they could not close it above there. You had to do it pre-market, after hours. Bang, gapped up, and what? It just doesn't last. It gets taken right back. Earnings come out. All right, so we're looking at that. Now, what does this chart look familiar to you guys, if you guys are traders? Look at this, okay? Let's look at AMD real quick. So AMD is looking exactly like Microsoft, okay? Sorry for that. So AMD is looking, right? Didn't we just see this pattern, right? Let me lay it out for you. It's not exactly the same. Do not take me that this is definitely going to come out bearish. This is definitely going to come out bullish or bearish, this, that. I'm just saying. I'm letting you know what it is that I'm seeing, okay? I'm letting you guys know what it is that I'm seeing so you guys can be prepared when you see things, okay? There's a lot of lines on here, so I do apologize. So what do we have? We have previous pivot high. We have a previous pivot high, okay? And then we rally it up. So, sorry, I'm just getting messages and all this other stuff. All right, so AMD. I do not know why. All right, so we have a double top here, guys, right? What was I telling you guys about Microsoft? We have what is this? Look at this base. So you rally it up, you hold it as support, you try to make an extension. 1, 2, 3, 4, 5, 6 pullbacks. Bang. You bounce back. Okay, you've bounced back to this area, which is right here. This line, 116.59. That's the top end of the range, or you could call it right here at 117.83, 118. So you break it down. Now you came back, you turned it into resistance. You tried to break up above it. Resistance. Look at that long tail. Again, barely breaking, you've broken up above that level. You're just holding right at it. They get it up there and immediately, bang, break it down. Now where are we at? We are at the top range of that second channel. So if I were to draw this out to you guys so you guys see what I mean. So that would be one right here. This is your second. That's your second. And then we could say this is even the third channel. Okay. See, again, it broke up, double top, broke back below it, resistance. Look at the tail. Look how this cannot close up above, that red mark right there. See how they're keeping it down? So now is this either going to break out? And what else do we have, guys? We have the 50-day moving average right in the way. Right in the way. All right. What are they telling us here? They're selling it. Okay, they're selling the stock. Are they selling it in front of earnings? Again, if it goes, it could go. But I'm just going to take it that this thing has put in its support, broke down, resistance, and it's making it resistance again. It is somewhat close to Microsoft. So if you look at AMD right here, yes, there's a lot more daily candles than AMD or than Microsoft, but it's somewhat of the same setup, right? It's somewhat the same setup, all right? You see what I mean? Pivot high, you come up, there's your base, try to break up, they break it down, of course. It had earnings a lot sooner. Let's see here. I'm going to pull up this chart for you guys. We're going to get right into it. So today we had Disney coin and stuff. I'm going to pull up. Let me go in and grab this chart for you guys. So give me 1 second. You guys are really going to want to see this. So, what do we have here, guys? Let me give me 1 second. Can we get a like and a subscribe? Thank you, guys. You guys are awesome. I greatly appreciate it, guys. It takes a lot of work for this stuff. So I want you guys, what I'm about to show you, I want you guys to think about it. I did not get this myself, all right? I found this. This is through research of other people. Thankfully, there's a lot of places you can go to. Let's look at this. Let's look at this chart, guys. Now, people are wondering about the GDP, right? Let's look at GDP and okay. I don't know what's going on here. So, Haver Analytics, BEA, Rosenberg Research, and I will also shout out Oxbow Oxbow Advisors as well. Okay. This is your GDP, and it is giving you a 2-year prior during the. This is for interest rates. GDP during interest rate cycles, coming into, during, and coming out of is what this is. What this is showing you. So sorry about that, everyone. I'm going to give you guys just 1 second to look at it. Again, I got this from Oxbow Advisors and BEA Rosenberg Research, Harvard Analytics as well. So I just want to shout them out for this. So what do we have here? Now let's look at this closely. So November 1967, the last rate hike was June 1969. Okay, June 1969, 2 years prior. GDP was at 4.8 During the rate hike cycle from 1967 to 1969, it was 5.1. 2 years after the rate hike cycle, which would be 69, 70, 71. 1.8. Now remember 1.8. When's the next rate hike cycle? April 1972. They start again. You guys remember in the 70s, you may not remember, but you will know that this is what Powell, the Fed, has been worried about raising interest rates and then bringing them down and having to raise them again, and inflation being sticky. That's what they're worried about, is what happened in the 70s. We don't have the 70s, though. Yes, we've had a lot of liquidity, a lot of money, but you had China shut down. You know, it's not like there wasn't energy. I mean, you actually had the quite opposite. You had energy at negative. And obviously, yes, it did rise for, you know, all the obvious reasons, demand, war, all that fun stuff, you know, completely, you know, changing up our how we go about where, you know, whether we're pulling out oil and using it, sending it off, whatever, what have you. You know, OPEC is, I suppose, where we're getting ours from. I don't need to know the ins and outs of all that, but April 1972, you start another rate hike cycle, okay? 2 years prior, that's going to be 1970, right? So April 1972 to September 1973, 2 years prior, 4.2. During the rate hike cycle, you had a nominal GDP 6.5, and 2 years after the last rate hike, -2. May 1977 to March 1980. Okay? That's what? 3 years? 77, 78, 79, 80. 3 years. 2 years prior, 4.7. 4.4 during, and -2. So what are we seeing here already? You're seeing 2 years after the rate hike cycle, you're seeing GDP really being pulled back. All right? August of 1980 to December 1980. 0.9 during 7.8. Okay? That was pretty short of a time lapse there. So again, the 70s and 80s, as you guys may or may not know if you're new, it was a whole tricky thing because then you had Paul Volcker come in around this time here. 83 to 84, you had 0.6. During the cycle, rate hike cycle, 8.5, 4.2, and we'll so on and so forth. Okay? 1987 to 1989, 3.9. During, 4.5. 2 years after, 1.3. February 1994 to February 1995, 1 year time. 2 years prior was 4%, which would not be there because the change is different. During was 4.5, and in 2 years after was 3.6. This was actually the only one that really wasn't that changed as much. June 1999 to May 2000, 5.3. During, 6.1. 2 years after, 2.1. Look at the difference. And we're starting to see GDP grow, and people are like, man, GDP's going up. I don't know why. This right here is telling you why, guys. June 2004 to June 2006. Okay, 3.4 during, 3.7, 2 years after, 1.8. Now I'm going to get into why this is happening. 1.8. Okay, 2015 to 2018, 2.6, 2.4, 0.6. Okay, so let's talk about this. What is this showing us? This, in a nutshell, is showing you easing, okay, 2 years prior. We'll go with like a 2000s, we'll say. Because you came out, see, I had to start kind of from the beginning, because what this is showing you is that you're coming from an area of easing, quantitative easing, okay, which would be the 2 years prior. And then during the rate hike cycle is they're raising rates, but you're still getting the last lag effect of that easing. That is the time lag. that it's showing you. And then you get into the 2 years after the last rate hike and look at how bad it got. Okay? So what this is saying is it is showing you a shift from one swing to the other, from a point of quantitative easing where you have liquidity, whatever, what have you, and then you go to tighten it up with the interest rate cycle, whatever else is going on, okay? So the 2 years that you're raising rates, or if it's a year, whatever, as you're raising, you're still getting the back end of that easing, and it really starts to show. You stop, and I have said this, wait for at least a year to 18 months until after the last rate hike, because when you're doing the rate hikes, it is still the last portion of the quantitative easing still coming out in effect, and then the 2 years after the rate hike, you get the big slowdown. And then they have to do what again? Then you're going in from negative GDP or real low GDP, then you're coming into quantitative easing again, right? So you're going in and you're coming out. You're going in and you're coming out. This is how the economy has been working for the past, 100 some years, however long it's been. Okay? Are you guys painting the picture? All right, maybe I can come out, and I didn't write anything down. This is alive, but I wanted you guys to see this because it's important. We've just seen, look at the GDP numbers that we just had. You can expect them to continue to go up, guys, for a little while. It's still early. So this right here in a nutshell is showing you that. 2 years prior, 4.8. During, 5.1. Now this is an average. Okay? 2 years after, 1.8, guys. Negative 0.8. This wasn't, not sure what's going on here. But you can tie them all together, guys, with the dates. Take a picture of it if you'd like. All right, this is important. Okay? Your average is 3.5. During is 5.3. And the average for afterwards is 1.6. Your median 4, 4.8, 1.5. Current cycle is 2.4. During, it's 1.8. But we also just got a 2-something handle. So that has went up. This has went up. All right, because we just got GDP numbers. I wanted to show you guys that. So what stocks did we have on watch today? I gave you guys a few yesterday. This morning, again, if you don't know, like, share, and subscribe. We trade right here on YouTube, Ivy League Trading, youtube.com. We trade live for free. We go over our levels. We trade real time. I'm going to, as we start to grow this community and help people out, get these videos out that we want to help to educate the professional way, all right? Because there's a lot of stuff that you guys need to know that I still think you guys people pay for things and they really don't get the professional education that they need, okay? They don't dive in and tell you, okay, I'm looking to play AMD after its earnings. Okay, well, what's the average ATR, and also adding in effect the average ATR on a volatile day versus a non-volatile day, standard deviations, okay, measuring your moves, reading level 2, reading time and sales. It's so important because it'll help you when you think you've missed a move and you have a catalyst that this stock really goes. So this is a volatile ATR. Right? What is this? 122.50, we'll call it, to 132.87. So that is $11 movement. So in a volatile AMD, ATR, I would say, is about $9.50 to $11. I'd say $9 to $11 I can expect. Right? Well, hell, we'll call it $8 to $11. Right? On a regular ATR, just a regular day, what is this? Right? 114. Sorry. This is, so 116.50 to 121. Right? 17, 18, 19, 20, 21. That's $5. So we're going to say $4 to $6 on a regular average day. On a low volatile day, you might get 3. All right, call it that. So I'm going to say, just that little brief work, I'm going to say On on an average given day, AMD is going to give me $4 to $6 I could expect, depending on the day. 107, 110, 8, 9, 10. There's $3 right there, right? This long tail, it's probably $8, right? $9. Look at this tail, right? That's major movement there, guys. 112 to 120, 119, 15. So 112, well, it's like 111.50. So $10, right? $10. So you guys need to know the ATRs, especially when you're news, because we also have earnings. We have earnings coming up. Where is the 50-day? Because if I think that there's a $10, 104, 150, oh, isn't that funny, guys? How much did we say the ATR was from like 8 to 11, right? On, obviously 10, 11 being on the max side that AMD is going to move. Well, if I use that, right? If I use that and I just put common sense, like you need to be taught this stuff. Look at that 100-day moving average sitting there, right? I have a circle there. That's where it used to be. Or that's the weekly moving average. If I put this here, okay, what is this 100-day moving average? Just so you guys can see it a little bit better, right? Okay. What is that? It is sitting right there at 104. And where are we at right now? 114. Ah, funny. That's a $10 move. Could we expect a rejection off of 115.50 off the 50-day? If there's bad earnings, we know where we're going. We're going to the 100-day. We're going down to 103 area, to the 100-day moving average, guys. We just found out the average ATR on a nice volatile day on AMD is $10. We got a $10 price difference. We're trading below the 50. It cannot get up above it. We've had some heavy selling, keeping this thing down. It could still come out strong, but chances are, if it doesn't, we know where our target is. These are just one of the few little things that, I want to try and help you guys to be able to become a better trader, because it's going to open up doors for you in your life. Okay? It's going to save you money. And if I'm saving you money, I'm making you money. Okay? I'm so passionate about this stuff. There are so many people that get ripped off with paying for courses, paying for all kinds of shit, and they don't even get the real education that they should get, because they're too worried about spitting out courses fast enough and not really taking the time and just letting them roll out, because there's a lot of stuff you need to learn. There's a basic handbook of things that you should know before you trade a stock. What are they? 52-week highs and lows. Where are you on the 52-week cycle? 52 weeks is 1 year. Are you at the top end or are you at the bottom end? Right? 52-week high and low. What's your ATR? Where is the VIX? Okay? The VIX is your volatility measurement for the index. Well, it's really to put, where's the VIX? Are we going to get a volatile day? Is the market going to be swinging back and forth? Is there a news catalyst? What's your ATR? And is that ATR set up for a news catalyst? Which it should be, because you should be. Why are you in that stock? There has to be a reason, because if there's a reason, that's going to be liquidity, right? That's going to be liquidity. That's also going to bring in movement. You get double the volume, you should get, double the RVOL or double the ATR. Like we just said, we could expect, $3.50 to $5 out of AMD on a regular, just a regular day with no news. And then we can expect up to $10, $8 to $10 on a news catalyst. So we have our ATR there. We're coming into earnings, so we should expect $10. And if we're expecting $10 movement and our $10 downside puts us right at the 100-day, I mean, what about the upside? 115, where's 125? 125 is right here. So there's our there's our range. That's where we're going to look for AMD. It's as easy as that. And you come in the next day, whether you trade the stock, the option, whatever it may be. So bang, bang. That's our range. And I'm sure the options prices are also pricing that in. And you can always just go to the option prices and see. All right. Again, I have a camera and stuff here. I just, I'm trying to move things around. I had some difficulties yesterday. But if you guys have any questions, also, please feel free to throw them in the chat. Let's go over a couple stocks today. So that's what I'm going to be looking for with AMD. I'm leaning to the bearish side that earnings may not be that great, and I'm sticking my head out there. I did it with SoFi. I did it with Spotify. I did it with Microsoft. I was right on all three. I will probably be wrong on this one because it's like now probability starts to like get itself. But again, start noticing. What my point is, start noticing the charts, guys, because these stocks are now trading at valuations that they weren't trading at the last quarter when they reported. Are they going to be able to meet the multiples that they're trading at? If not, they may see a little bit of pressure. All right. This morning we were talking about Amazon. I really want to just focus on, because this morning we didn't have like really any news. We had some downgrades and upgrades like CVNA, right? CVNA had an upgrade, and I told members in chat that what I'm looking for is it's fine if it pulls back to this area right here, this double top previous pivot high. If it starts breaking down, then that's a problem. What did we do? And I told them it could take a couple weeks. I said, remember GME, remember AMC, all them. I traded those names. I traded GameStop in October and November, and I don't even think the squeeze happened until December into January, if I remember correctly. It takes time. Now they're starting to get worried. If you break up above this level here tomorrow, you get a gap up over this level on Carvana. If you get a gap up, there's a lot of institutional put holdings that are dated for November, so there's still time there for them. I don't know if you get the gap up. Okay, I don't know. But if we do gap up and you pull back to hold this level, I will look to be long at Carvana. And I would, 46, get it to 50. Okay, looking for a few dollars, see if we can break this previous high. And what I would look for if we do gap up, if we do gap up, I would like, let's say if we gap up tomorrow, I would like a pullback to here, right? I'd like a pullback into this 46.50 area. Maybe you get another rally up, you pull it back. Maybe you hold this level for a minute, right? Maybe you hold it for a day or two, and then it just starts curling up because now the trend has changed. How do I know the trend has changed? Well, if I draw a line, if I draw a line as simple as this going this way, that's the trend. What's the trend doing now? The trend has changed. But this is also a decent point for possibly a pullback. This is probably the pullback. Shorts taking profit off of a nice short there. And you turn this back into resistance, then you look for more downside on this name. And I would look for $37. That $37 mark. Again, because you could always just gap down and then just kind of roll it over. Again, 2-3 days worth of downside more. Maybe just start getting heavy selling for anybody that was long, that still had shares. And then you get shorts piling onto it, right? And you get a short squeeze to the downside. No, I'm just kidding. But, so that's what I would look for with Carvana. And if you guys are new and you have any trouble with anything that I'm saying or don't know what it is that I'm talking about, just you can throw it in chat if you need me to explain something, because this is my goal. My goal is to try and help you guys. All right, I don't charge you guys anything. If you guys have any questions, I urge you to ask, because there are many people that are also sitting on the sidelines that want to know the same thing you want to know. Okay, what is it? I've been doing this for over 7 years. Okay, I'm not here claiming I'm the best, but this is something I'm very good at. All right, I've been doing it for a long time, every day. I've been in the markets for a long time, guys. All right, I didn't do this stream for a while because, it just got to a point where I'm like, you know what? There's just so much stuff out there. This can change your life, guys. It really can. It's all up to you to put in the work and put out. I fully believe you get back what you put in, right? You put in a ton of hard work, your time, your energy, all that good stuff, you get out what you put in. I firmly believe that. All right, so what you also want to do with like Carvana and some of these stocks is you do want to see where the weekly moving averages are and the daily moving averages, because they're going to be either entry or exits, right? They're going to be entries or exits because you're going to have it make it support or you're going to have it make it resistance. So what else did we have today? What was another stock that ran? And we talked about a couple of them last night. AMD in the morning. This could have been a little scalp for anyone that wanted to play, but I went to go do it, and these options were nuts, guys. I was like, no way. They were $3-4 an option. And I'm talking like, a dollar or two movement, and you're paying $3-4. You're going to get hurt if you're trying to YOLO into an earnings call that early. Now, you could get an earnings run up, but chances are you couldn't, and you wake up tomorrow, that IV is probably still going to be there, but not as much. These options were nuts today, so I just stayed away from it. So pre-market, I said, and we pulled back right to it, which was funny. On AMD, I said 113.50. Where did we pull back to? 113.51. And that was the area right here that we made resistance. You could have caught a little bit of downside there. You broke it. What is this? This is a good lesson right here, right? We have initial morning low matching up with VWAP, 9 EMA, VWAP, and the initial morning low. So you have the initial morning low. It gets broken. You get some follow through on what? What else you guys see? Right? You guys see this? Look at the increase in volume on the way down. Right? That's telling you that more than likely this area that broke is going to become resistance. Okay? Now, was this a gap down though? It was a gap up type of day. So there's a couple ways you could look at this. Right? You never closed. Also, this is an exit point. Prior day's low. Well, which was actually down here. But as far as like throughout the day, this area right here is what I would more consider this 112.50 area. All right, you did wick down through it, but you brought it right back up. So 112.66, and look at my levels holding here. Look how well they've been holding. Like, look at that. It closed right on it, and it opened. Obviously, it's going to open on it, but it just, it wicked right off of it. Not off of it, but, it was just sat right to it. That was the inflection point. That inflection point was 112.65. I can help teach you guys how to put your levels where they should be. Off of closing. And oh, sorry, man, my guy NASCAR. How you been, buddy? I didn't see your comment. I'm sorry. SNMP. I did see that on the scanner, and they were talking about from 2023 40 cents. Yeah, to $14. Dude, that's sick. Did I just talk about SM? Did I see that today? Was that something that was on today? Because it sounds like something that I was looking at today. So what else we could do though, is, you could always measure your move, measure your move. That's a 50% retracement. I think a lot of people get Fibonacci's wrong. At least some of the, like I was watching a short, the other day, and completely getting, if it works for them, great. Listen, trading isn't like perfect. There's not one way to trade. There's not one way to make money. You're making money, you make money, right? But I just didn't really like the fact that it was a Fibonacci video, and I'm sure all of you guys can probably attest that you've seen it. The Fibonacci video was actually used in the wrong way. He was saying that it pulled back 50 to 60% of the move, right? Okay. What is the point of a Fibonacci? The Fibonacci is to give you an idea, right? Let's say, let me pull up this here, right? So if I pull up a Fibonacci, right, I got it up right now. So if this is the day that I'm trading, right? So, or we'll use this. We'll go to an uptrend, right? We'll go to that double top right there. All right, so let's zoom in. And we don't know what's coming up the day after. All right, so we come in the day and we're like, wow, look at that. You know? So he's saying that it pulls in 50, 60%. What is that telling you? Look, 50, 60% is taking back the move. That is telling you a sign of reversal, not a sign that you should get in to get more upside, because that's how they were using it. Okay, because the point of a Fibonacci is you want to see a pullback. Let's say if you're long, right? If I am long, right? Let's see, let's remove drawing. So if I go to this low to this high, right? Right there. That is a measured move. And look where it ends up. Look where the buyers step in at. Right here at the 38.2 Fibonacci for the long. This is how a Fibonacci should be used because it is telling you something. The Fibonacci is a tool that helps tell you who is in control, buyers or sellers. And that's I always try to reiterate to people in chat. And when we go into trading day, guys, give it time, number one, especially if you're trading options, or go ahead, jump right out the gate, pay the premium if you're going to get the move. I am not telling you what to do. But remember, who is in control and has anything changed about the trade? Has anything changed at all? So if I'm looking at this Fibonacci, we get our run up and we pull back to the 38.2. What am I going to expect? I'm going to see, hey, do I get some more buyers to step in here? Where else is it? Look at that. Where else is it? Right? It's also at the opening price. Okay? It's also at the 38.2. So I have the 38.2 Fibonacci right at the opening price. Do I have anything prior? Oh, look at that. Nah, never mind. It's pivot low. I thought it was the low of the day. So anyway, this is resistance. It broke down. It broke back up. Pulls back 38.2. This is telling me that if this thing decides to break down further, right, that uptrend is no longer intact. Why is that? Because if I get a pullback all the way back to the 50 or 60, buyers are not in control, okay? You do have your VWAP here, but it's, that is what it is that is too far of a movement to say that buyers are still in control. Because if buyers are in control, you're going to want a pullback to a 23 fib or a 38.2 because that is going to be profit taking from the long and not flat out selling, okay? It's about what is the Fibonacci telling you? It retraced 38% of the move, which is not selling, which if we got to, possibly 50, we're going to say things have changed. We've literally taken back the majority of this run. That's more than profit taking. That's selling. We get to the 68.2. Yeah, definitely. Look, this uptrend is no longer intact. So they were using it as in to continue their move. I'm like, oh my God, he's telling these people this. The Fibonacci is to tell you if you get a pullback in a direction to the 23.6 fib or the 38.2, especially if it lines up with something else, whether it's the 9 EMA, VWAP, opening price, previous high, whatever, previous close, whatever it is. This small pullback is telling you that it's just profit taking. It's not selling. If it extends further down, you can probably expect it to break VWAP because now you've also, to the left, broken prior day's low again. You broke it. You broke prior day's low and close. You tried to regain it. It pulled it back and it broke it again. It tried to go up, reclaim it. It could not find buyers at this price to extend higher, which is the overall move higher. Okay, so that is a bearish sentiment. That's bearish sentiment. The buyers either aren't there or the sellers are just too much and they want out. Okay, 60%, 70%, especially 100%. That is a trend reversal. That is not just profit taking. That's selling. There's a difference. So I wanted to say that because and I'm going to go into a Fibonacci course because there's a lot more that you guys can use with this. He literally was trying to tell them 60% retracement and 50. I'm like, oh my gosh, these people are going to lose money. If you're telling me that I get this pullback all the way back here, you're going to tell me somebody's going to step in and buy that because you just made this nice long run and you pulled it all the way back. Chances are you are not going up any. If you did not hold the opening price or VWAP or 38.2 or 28, really the 28.3, which is and 38.2, because again, that's all I'm going to keep it at, is that those two spots are profit taking, and you also get it lined up with something that's an entry point for like new longs that aren't long yet, that are waiting for the pullback that they were never able to get. See how this thing just ran? This was an area for them to get long. Hey, I got 38.2 lining up with the opening price of the day. My risk to reward, what would be my risk? Possibly a breakdown like to test like in front of VWAP. But even then, no, because you've taken back yesterday's close. You have gone just way too far down. Chances are you've retraced 50% of the move. That's not profit taking, that's selling. I just wanted to talk about that real quick, because what I was watching was not right at all, and it's got a ton of views, and I'm like, oh my gosh, these people are going to lose money. These people are going to lose money. But so things like that is what we do here. Okay? If you missed it, I apologize. You'll have to go back and watch it, but I just want to make sure you guys are getting the right information. So Disney went off today. We had some small caps, mid caps, like Wayfair. Disney went off today. This thing went off without me. I completely forgot about it. Everybody and their mother was, as far as like Barron, CNBC, for no reason, just talking about it. So I did already have this thing charted out previously. It's on an ascending wedge, so that is a bullish pattern in a sense. And they just, maybe the institutions or somebody needed. It's so steep. I don't know how much further, they expect this thing to go. This is a daily chart. Look at it just get halted right at the 50-day, right? That's an area of profit taking. Well, you did have, I guess, this, you could say you had this here, but even then, it's not that pretty, right? You did have that breakout wedge, double bottom. And the volume still, like, you want to see volume that's greater than the selling to like reclaim those areas. I hope Disney's going to be all right. I'm sure they will be. If you want to look at Disney, I would watch for the pullbacks in the 87.69 to 87.50 area, right? And see if you can regain the bottom end of this range here, and then you could just look for $2, $3, $4 longs right up into here, right? Oh no, that's not what I wanted to do. All right, and what this will allow you to do is you can just step away and trade whatever it is you're trading during the day, right? If you're long here, and you just put a stop loss at like, what is this close here? We'll put it like right here. So you're gonna risk 87.38 to like 87.75, 87.69. So you're just going to risk a few cents. You're going to risk like 30, 40 cents to make, what is this? 89. So you're going to make like $2, $3. All right. 30 cents to $2, $3 risk to reward is great. Oh, more right here. There's the top. There's the range. That's your resistance. So you could do two things. You could see if this thing decides to gap up above the 50-day, which I doubt it'll do. I expect it to pull back first. Maybe test this pennant. And then look for upside. That's a nice trade there. All right, believe it or not. What that allows you to do is actually just make money trading. Especially on a day where things could be slow. Right? So we had... Kava is another one that, we've been talking about for a while now. It's had its pennant. It broke out today. Pennant, break it down. Break down to 50.32. Rallied it up. This would have been more of a swing trade if you were long this thing. The volume died out. This stock kind of got forgot about. Okay? This stock kind of got forgot about. We had some action this day. I played it here. And today I didn't get a part of it. It looks like you didn't have sellers. It looks like the sellers forgot that they owned it. Because look at the selling you have up here. Or they're changing their mind because Kava's starting to be talked about. And this thing could be... this thing could turn out to be something, right? Tomorrow we have Uber. Oh, guys, Intel. Intel had a bad day today. Look at Intel. It took back just about its earnings, guys. This thing needs a friend. Intel needs a friend dearly. It really does, guys. So I would look to help them out because Intel needs a friend. Seriously. Kind of like me, I guess, you know? We're two peas in a pod, we are. No, I'm just kidding. Again, we do trade live Monday through Friday right here on YouTube, Ivy League Trading, youtube.com. If you guys could do us a solid one and more importantly, subscribe. We're just trying to build a community of traders here. We charge nothing, okay? You can come, ask your questions, post your plays, grab some ideas from me, grab some ideas from members in chat. We're here to just have a trading group, and it's completely free. We're here to talk about trade ideas. We'll go over trades that we did, that we took, whether they were right, whether they were wrong, what was our mistakes, because we're human. We're not perfect. All right. So Intel was down. You did have some downgrades and upgrades, so like CRM. Tomorrow I'm going to be looking for like Uber. I'm going to be looking to play Uber possibly. I kind of set the day out, and I was just waiting for these earnings. Look, we hit our target, by the way. That's pretty cool. We've been doing this, guys. If you guys are new here, we've been hitting our targets. What do I mean by that? Look at this wedge, guys. This was a measured move. This was a measured move. Come on. Right? So if I measured that move right there on that breakout, and I measure it, there's my base to here. Boom. We break out. Right? This is the kind of stuff you guys can learn here. Look at that. Oh, it's already there. That's where it is. Sorry. So I got to remove it. So there it is. Right there. And that was the circle that I put that said, hey, this would be our target. From 213 to 230, you got it. We got it. Right? We got it. So these are things you want to do. Because this allows institutions for them to be able to have places of targets that they can take profit if something goes wrong. Like what's the risk to reward? Right? What's the risk to reward? You're buying it down here, you're going to give it to the previous pivot low, but your upside is this whole base. Right? It's that whole base. It's right here because I didn't see it. Right here. Right? Right there. Boom. Look at that. That's a beautiful pattern, guys. You measure that move out, bang, took you right there to your target. Okay? We had a lot of these. Right? We had a lot of them. Okay? We've been on oil. Look at USO. Look at the pattern it's putting in. Same thing. I still have a target up here. We'll see if we get there. I can't remember if I measured this one, if I just kind of put it up there or what. But we'll see. It's still climbing. It's still climbing. This is going to give you inflation data that could come in higher than expected too, mind you. So this could add on to rates. Remember that. All right. We were also just playing, just like Disney, what I just gave you guys there was intraday trades that you can take and say, listen, at this level, I can get calls or I can just buy the stock outright. I get my $2, $3. It's probably going to pay you more than you think, but you're making your money. Okay. You set your stop loss. You can set it to, for your targets, whether you set an alert or you set it, directly on your computer to sell at these prices. All right. So you don't even have to look at it. And if it works, it works. It doesn't, it doesn't. Your risk to reward is at its best. So you already know that. You've actually taken yourself away from messing yourself up on a perfectly good trade that could just give you your check. That's going to pay you. Right? GLD I've been watching. Now these oil prices have been going up, so I'm kind of curious what that does to gold. All right. Tomorrow we have Uber. I honestly don't know what to expect about Uber. I really don't. I don't know if it's going to be good or bad. Look, they've been buying into it. If any of these stocks have told us anything, it's that they've been either buying into it or selling into it, and it looks like they want to own it. And I would expect, I'm going to stick my head out there again and say Uber has good earnings tomorrow. All right? Or not that bad, and you may get some upside, whether it takes the earnings call to go to the upside or not. Right? Coinbase had news after hours, kind of. There was some Judge news, I think it was. So if I zoom this in, we're going to be looking at Coinbase because that's going to give us something to watch. Let's go to like the 15 minute or so. So look at this. This is a nice chart pattern here, guys, especially if we do get the bounce. Coinbase does have earnings. Wait, I really want to see this, guys. I think I might have just found us another trade. Where did this uptrend start? It obviously started. Where did the uptrend start? Where would you guys say it started at? This is probably a bearish setup though, because I feel like they're selling into the earnings. They've gotten this huge run. They have a court case. They have earnings coming up. But man, I don't know, guys. I'd have to, let me pan it out. I'll look at this later because they don't report till later on. So there's our 100-day weekly moving average. There's our 90 MA at 85 on the weekly. All right, 85 is where? Right here. Oh, look at that. 85.50, but still this previous double top. Man, I want to know if do you guys see what I mean by like it putting in? Now it had a lot of volume to the upside, but do you guys see what I mean by like putting in like the channels that they've been putting in, like AMD, Microsoft, and such? So if I take you to it, right? This doesn't mean that they're going to do good. This doesn't mean that they're going to do bad. But look at the channels that they're putting in. There's your high. There's one channel, right? And there's your second channel right there. It's work. What is this telling you? This is another lesson. This means that sellers are stepping down. Buyers are not stepping up. Sellers are actually stepping down because they want out. Sellers only step down for one reason. Either the sellers will step aside and won't sell, and they'll just let some volume bring the thing up, and then they sell. Or are they just putting those, are they just, throwing them orders out? Are they trying to get out of the stock? What's going on? Possibly earnings, right? Possibly earnings. You did have a nice run up with that other court case, but I feel like this area here, you got to repay. You got to revisit it. You don't have to do anything, but my guess would be we will see $85 again, $84.65 again. Okay? I think we will. But again, doesn't mean we have to. I could be wrong. And I will be wrong. I will be wrong. But been doing a great job thus far. I still have to go through a lot of stuff, like a lot like stocks. So I've been looking at like steel stocks. So we're at the top of the range now. I want to look to see if I can be a buyer of a pullback to potentially break out of this range and extend higher, right? I should have been a buyer here on earnings, but I wasn't. It is what it is. I mean, you have the 100-day, you have the 50-day, and you have the 200-day. All right there. All converging. Right? All converging. So, it's like Cleveland Cliffs, right? Look at that pennant breakdown. And look at the hold of the 200-day, guys. Look at this. You held the 50-day. Boom, boom. You come up, bounce off of it. You gap up above the 100 and 200-day. You pull back to the 100-day, which is the blue line. You test it. You find more buyers. So the buyers, what did they do? They stepped up. It got bought up. We pull back to the 90 MA. You put in your little pennant, right? You broke out of the longer term one, which is right here. Okay. Which is right there. And we will put this like this color. Boom. Right? So if we expand it or take it back. All right. And what do we have here that a lot of people don't know? Do you guys, some people don't even know how to read a chart. This is a stage one. That's a stage one rally. Stage one rally. You put in a base. And you get the pullback to shake people out only to miss the second leg higher. And then it happens again. Right? In regular markets, like as over the years, what do you have here? Stage one rally, we've put in a base. Now we've shaken out weak hands. Was this the low? We just put in a higher low right there. and now it's off to the races. All right, what are we going to start seeing out of like these steel stocks, industrials, especially if they still have money from stimulus and stuff, where they're going to want to build a whole bunch of things and kind of just, I don't know, maybe just get their hands on it and just stack it and just own it, kind of like what China was doing from what I heard. I don't know what they're doing. All I can tell you is what I've read in Wall Street Journal and things like that. So I'm still searching for my ideas again, because we were on Ford early. These all had set up for us. Nice pennants, breakout, retest, bang, long. There's your thing to measure the move, and it went exactly to that, and it put in a double top, right? Look at that. This is what we do here, guys. Come join us, right? Manage your risk, catch some upside, catch some downside, and make some money. Change your help. Stuff can really help you. You do not need to spend thousands of dollars. That's all, guys. That's really all I have tonight. I just wanted to go over a few of those things. You had Yellow, which was a business that's apparently going out of business, and now, so I'm not sure what's going on there. So I just, that's really all I have today. There was a few that were running. I'm still watching like BABA and stuff. It broke out today, but it just didn't give me the momentum I was looking to enter it, right? For what it just, if I'm going to enter something, especially when I'm coming into a week where I have like big earnings, I'm going to just be patient. And that's another part of trading that I think a lot of people need to work on, is being patient. Waiting for the big moves, waiting for the news, the earnings, waiting for the liquidity, and waiting for that big momentum type of day, because that's the only trade you need to make. You make one trade, you're done for the week. Could be, That's all, guys. Thank you guys so much for joining us tonight. I hope that GDP chart was helpful. Gives you, you can go back and look at it. Gives you an idea of how long this stuff takes, right? Because it doesn't happen overnight. I greatly appreciate the likes. I greatly appreciate the subscribes. And guys, seriously, please, if you're new, if you have a question, if you're struggling with anything, message me, put it in the comment section. I will get back to you. I will go over tickers, charts, whatever it is that I feel as though I am capable of helping you with. This is what I've built this for. Okay. I'm going to have a list of stocks that I'm going to do my research tonight that I'm going to look at tomorrow. I'm obviously going to be looking at Uber. Going to be looking at a couple of the other smaller caps that ran today. And we're going to see what the rest of the week brings us, guys. Thank you guys so much for joining us tonight. Again, like, share, and subscribe. We're trying to get to 100 subscribers. If you guys have any questions, anything at all, throw it in the comments section. You guys have a great night. We will see you tomorrow morning live right here, Ivy League Trading, YouTube.com, 7:30 in the morning, guys. Have a great night. We'll see you in the morning.